Good afternoon, everyone. My name is Lee from SilverLiningAnalysis, and today I got something pretty special for you guys. Something that I've been working on for a couple days now. I've created a spreadsheet that automatically updates the valuation of all the companies in the GDX, the GDXJ, the SIL, and the SILJ. So all of the ETFs that people usually talk about when they're talking about investing in gold and silver are going to be in here. They're automatically updated. I'll tell you exactly what they're updating in just a second. Let's just dive straight into it. Here you can see my spreadsheet. These are the spreadsheets that I've used for a couple videos now, but a couple things are very different. I'm just gonna walk you through it from the beginning. What have I done, right? I have been searching for some information from the past couple weeks, and I wanted to know what exactly is inside of all of these ETFs, because people talk about investing in gold and silver and they talk about the risks that are there with smaller mining companies, and I fully understand that. So what the advice usually is to buy a diversified ETF. And these diversified ETFs are the GDX, that is the major mining index, that is the GDXJ, the junior mining index, that is the SIL, the silver miner index, and that is the SILJ, the junior silver miner index. But these names, the major or the junior silver or gold miners, they don't really represent what these companies actually mine that are in these indexes. And so I've made an overview right here, all the companies that are in there. And in the first column here, you can see the names of all of the companies. Wait, I'll make this a little bit bigger for you guys. Right here in the first column, you can see all the names of the companies that are in the GDX. This tab is the GDX. Right here in C, D, E, and F, you have a column showing if this stock is in another ETF as well. So you see, for instance, Pan American Silver. It is in the GDX, but it is also in the GDXJ, it is also in the SIL, and it is also in the SILJ. And so there are a couple stocks that are in multiple ETFs. I'm just gonna walk through it pretty slowly so you guys can take some notes, or you can pause the video if you see a stock that you're interested in. But these are all the stocks, and you can see that there is quite a bit of overlap between a couple ETFs, especially between the GDX and the GDXJ. For instance, this whole row of companies, right, that's about 15 to 20 companies, they are both in the GDX and inside of the GDXJ. SSR Mining, for instance, is in the GDX, the GDXJ, the SIL, and the SILJ. So in ETF naming terms, you would say that SSR Mining is a major gold miner because it's in the GDX. It is a junior gold miner because it is in the GDXJ. It is a major silver miner because it is in the SIL. And it is a junior silver miner because it is in the SILJ. So of course, that doesn't make any sense. So I think we should collectively just forget the names of these ETFs, because clearly there is too much overlap within them to even be called right different in this market. But right here at the bottom, there is a percentage overlap with different ETFs. So of course, we are looking at the tab of the GDX right now, and all of these companies are in here. So there is 100% of the companies is in the GDX because that's the ETF that we're looking at right now. But 43.8% of these companies are also in the GDXJ. For the people who are interested, this is market cap and percentage of portfolio weighted. So 43% of this portfolio, the GDX, is also in the GDXJ. 21.6% is also in the SIL, and 29.6% is also in the SILJ. If you are looking to buy a diversified group of miners and you buy the GDX and the GDXJ, just understand that there is about a 40% overlap between the two, so you are not as diversified as you would think. There is a big overlap between all of these ETFs, and the name doesn't say anything about what is inside of these ETFs. Another thing that I've done with this spreadsheet is that I've automatically calculated the stock prices, right? This is imported from Yahoo Finance. The daily moves are also imported, and the market cap is imported as well. So In my previous videos, I have explained to you that I'm calculating all of these ounces that these companies have in their resource statements. That is measured, indicated, and inferred. I'm counting all of them up. I'm turning all of those ounces, as you can see here, in silver equivalent ounces and gold equivalent ounces. This is also done automatically, so they change day by day depending on the prices of gold and silver and copper, zinc, and lead. And what I do then is I take this market cap that this company has and I divide that by the silver equivalent or the gold equivalent ounces. And that is what you get here. For instance, if you buy Agnico Eagle Mines, you pay $59 billion. And you get, for that $59 billion, you get about 5 billion ounces of silver equivalent. That means if you divide those two, that if you buy Agnico Eagle Mines, you buy an ounce of silver in the ground for about $18.92. Because Agnico Eagle has a lot of ounces of silver in the ground, a lot of ounces silver equivalent. And if you buy all of them, you pay about $18.19 for that. Or if you put it in gold terms, you pay about $1,201 for an ounce of gold in the ground if you buy Agnico Eagle Mines. And that is about 24% of the price of gold. So you're buying an ounce of gold for 1/4 of the price in the ground as above the ground if you buy Agnico Eagle Mines. So I've done that calculation for all of these stocks. And if we just scroll through them, you can see that there's quite a big difference between each of these stocks and the valuations that they have. And if we go all the way down, we can see an average here. So this average means that if you buy the GDX, you are buying a small piece of all the resource statements that these companies have. All of them combined, an average of that gives you that the ounces of silver equivalent in the ground are valued at about $10.24 an ounce if you buy the GDX. Or in gold terms, they are valued at about $615 an ounce, or about 13% of the price of gold. Now, I don't know whether that is cheap or not, but I know that gold above the ground is valued a lot more than gold that is currently in the ground. There are a bunch of reasons for that. There is probably a reason why Discovery Silver is only 3.5% of the price of gold. And for instance, Lundin Gold is 37% the price of gold. There's probably a reason why this averages out to 13%. It is your responsibility as an investor to try to understand what this means and where the opportunities lie. But what I'm going to do with this information is I'm going to come back to this chart every single month just to look at how these numbers have changed. How valuable are these gold deposits right now compared to the price of gold above the ground? I personally think that this is cheap, and that is why I am in a lot of these silver and gold equities, because I think that they are dirt cheap. But this is the GDX. I have made the same calculations for the GDXJ as well. So you can see the chart of the GDXJ right here. These are all the stocks that are in the GDXJ in column A. And we're just going to walk through them pretty slowly. Just the same as with the GDX, there is a big overlap with the GDXJ as well. And I'm going to show you exactly how big that overlap is on a weighted basis. So this is the GDXJ. You can see that there is a 78% overlap with the GDX. And that is quite a large overlap. So if you buy the GDXJ, you are essentially buying the GDX with some additional risk. I thought that that was quite shocking. That is a very big percentage of overlap. I would imagine if you buy the GDXJ, you are interested in the junior mining aspect of the market. But what you are actually buying when you are buying the GDXJ is just a smaller basket of extremely big mines, but with about 50 very high risk cases, some of which do develop into a mine and some of which don't. The GDXJ also overlaps about 32% with the SIL and about 39% with the SILJ. And the same here, I have calculated the valuations on all of these companies, so you can go through this at your own time and at your own pace. I'm just going to show you in this video what I've done, right? But I'm going to show you this really quickly. Right, just the same calculations that I've done for the GDX. This is the percentage of gold, right? This is the valuation as a percentage of the price of gold. Looking at the resources that these companies own compared to their market cap, I think that is a pretty good valuation metric. And that is the valuation metric that I use to pick out my own investments. You can see that the GDXJ is a little bit cheaper than the GDX, right? It's 9.4%. So the resources in the GDXJ are valued lower than the resources in the GDX, where the GDX was valued at about 13% of the resource value. The GDXJ is valued at about 9.4%. So the difference, right? The 22% difference in this ETF compared to the GDX, right? Because 78% of this ETF overlaps with the GDX. This 22% difference gives a almost 30% difference in valuation. So the stocks that are in here lag very hard compared to the GDX. I think that is very interesting to keep in mind when investing. So let's just go over to the SIL. So these are the stocks that are in the major silver miner index, the SIL. You can see them in the column A right there. And you can see whether these stocks are also in the GDX and in the GDXJ and in the SILJ. And I haven't said this before, but this is the percentage of the portfolio. So you can see that Pan American Silver is about 11.88% of the portfolio. And then if we zoom down, we can see that there is a pretty big overlap as well. The SIL overlaps about 97% with the GDX, about 60% with the GDXJ, and 90% with the SILJ. And what I really want to show you with this comparison is that if you get into the gold and silver investing space and you are trying to become diversified in this space, one way to diversify is definitely by buying ETFs, right? Buying a single ETF is definitely a good way to get diversified. But if you buy all these ETFs, if you buy the GDX, if you buy the GDXJ, if you buy the SIL and the SILJ, you are not as diversified as you would think that you are, because there is a big overlap between these ETFs. There is a big overlap between that. And you are not getting the diversification that you would guess that you would get buying these ETFs. And that is why it's so important to get a little bit of understanding about the deposit itself. And that is why it's also important to understand what you invest in, right? I'm a big advocate in learning how to invest and understanding an investment before you make it, getting your own knowledge up to date and broadening out your own knowledge base can help you to pick out very diversified investments yourself to become as diversified as you would like to be. Just looking at ETFs as a way of diversifying yourself might not be as diversified as you would first think. And that is interesting to see. So I did the same valuation, right? I'm going to make this a little bit bigger for you guys. I did the same valuation here with all of these stocks. And we can see that the resources in the SIL as a percentage of the price of gold are valued average at 8%. So you can see the smaller the investment, the smaller the companies, the lower the valuation. GDX is very big. There are only 10 billion plus companies in there. That's valued at 13%. Then we go to the GDXJ, companies get a little bit smaller. There's a lot of overlap, but the companies in general get smaller. You see that there's a 9.6%. Then we go to the SIL, companies get smaller even. They are valued at 8%. And if we go to the SILJ, I have made the same overview here. I'm going to make this bigger for you guys. We can see that the SILJ is valued at 6.29, so 6.3% of the price of gold. So when the size of the company decreases, their gold ounces in reserve and resources get valuated less. And that is very interesting. So the bigger the market cap of the company, the higher the valuation people put on their ounces. And I don't really understand why that is, because a 4 million ounce deposit could be worth just as much as a 10 million ounce deposit, depending on the jurisdiction and the amount of money you can make when you start mining it. But that is simply the market that we're in right now. Is the SILJ a better deal than the GDX just because this number is lower? I don't think so. There's definitely a lot more risk the smaller you go in a company. Maybe that's why the valuation is lower as well. Could all of these valuations go up in the future? For sure, definitely. That could happen. They could also crater down, right? This could become 3%, this could go down to 5. We are going to track this every single month. We're going to come back to this chart every single month and look, right, what has the valuation of these ETFs done over the month. I didn't just want to make this video to show you this spreadsheet. I also wanted to tell you guys something important. I have put this spreadsheet online for all of you guys to use for free. Right? You can find the link to this spreadsheet, you can download it yourself, you can tinker with the numbers, and you can see what the investments will be worth, what the market cap could be at different gold and silver prices. I think that's going to be very interesting for you guys. If you want to get this spreadsheet, just go to the Buy Me a Coffee page. Link is in the description. Go to my posts. There's a free post for everybody to see. There's a link to my Google Docs. You can just download this and just see for yourself, right? It updates automatically, so you don't even have to do anything, and you can track the prices of all of these stocks and their valuations. I am going to make a spreadsheet like this as well for my own personal portfolio. I am not going to share that with you for free. If you want to see what I invest in and what my portfolio is doing, you are going to have to support me in order to get that information. You can also do that on the Buy Me a Coffee page. So thank you for that if you decide to do that. Really, that is it for me for today. I just wanted to show you this presentation and this spreadsheet. I'm going to come back to these valuations at the end of the month, so stay tuned for that. In the meantime, go download this, go check it out. I hope you have a good day, and I'll see you in the next one. All right now, bye-bye.